Hi, everybody. This is Steve Chen. I want to share my view of the current market with you. The title today I'm giving you is the market attempt to resume upside. The reason I say that is because there are two big long down K bar of the, actually this is the uh, NQ, NASDAQ, QQQ future, 2 weeks, and plus it's already overcome. And also geopolitical events is become decreased now. And people now actually is very optimistic about the chance Trump administration is going to do something about the tax reform. Therefore, the market start to have some sign of recovery. So I'm going to show you more. This is what I put in yet last week. I said reason to be cautious. At that point, I show you this chart. Using the moving average, I'm saying that looks like we probably is going below, and maybe in this point or this point. The point is whether it can move back out of the drop, the falling curve. So, and at that point, the political events is not good, and Trump is facing a lot of controversy, and also he intentionally threatened that he may actually close down the government. So that makes the market look pretty dicey. So to make this more obvious, let's look at the chart. Okay, this is NQ. That is NASDAQ QQQ, if you are familiar with the top 100 of the NASDAQ company. The index, the future, look, if you see this is the day actually the North Korea threatening to shoot some missile at Guam. So the market dropped at this level. But however, over the weekend, looked like the behind the scenes the negotiation worked. So the crisis resolved. So in 3 days, it's going to recover. But in the end of the day, people are so unhappy with how Trump reacted to the Virginia riot. So there's another big sell-off. So notice that it's two big sell-off, and also you see the chart. It's going to sideways and it's going to lower. So with these two big down K, make me very become cautious. At that point, I do not know that whether this will be, whether this is going to go lower, or I have not much faith to say this will go higher. Now it's obvious for us to can see this, right? But at that point, I get cautious. That's why I make that last presentation to you about that. Okay. And during this period of time, you see the markets go sideways, meaning cannot decide. Then even we have the Harvey hurricane. Ironically enough, it's Harvey hurricane actually make people believe that with the national disaster, facing this national disaster probably will actually get all the American people stand together. Therefore, people feel that the force against Trump will be weakened a little bit, and people has to be behind him to support what he wants to decide. And therefore, there's a saying that it's more the chance of the tax reform is more likely to happen, and Trump very successfully to get that message out and make the market start to be optimistic. So you can see in 3 days, it's not only conquered these two top of this upside of the down K, Now, as of today, it even surpassed the most recent high here. So this actually tells us that market is trying to resume up. Now, let's review the Granville chart I showed you last time. So if we have this one here, then let me try to put the side by side with this, okay? See if you can see the same thing I'm seeing, okay? This is a moving average. The basic idea is that market goes through cycle from the previous low. Then once it crosses above the moving average, then you see whether it can stay above the moving average. Once it successfully stay above average at the market low, meaning that you actually suggesting you have a new uptrend started. So you have the new uptrend, then you will get people to decide to take some profit. The idea is that how significant the profit taking happen. If the profit taking manage to go below the moving average, that is dangerous. If it actually is not going below that, meaning that this is healthy profit taking and ready for the, so it's money changing from the strong hand to the weak hand. Oh, I'm sorry, reverse. Money changing from the weak hand to the strong hand. The people has a less confidence will sell here. The more confident people actually will buy this dip and move it higher. Then you have next trend. If with luck, you actually will not even cross below here, then you know the uptrend is intact. But with some, as the price go higher, people get nervous. So sometimes the profit taking will be overdone. It will go below the moving average. Once go moving below the moving average, you have to start to be careful, because now you watch very carefully to see whether it has ability to go above the moving average and stay above. So if like this one is more go above the moving average, stay above, then your bullish trend is alive. If actually this is it's not able to go higher and start to go below, then you probably already see the downtrend forming. Then you will have like this. This is what the Granville proposal usually have. This wave 1, wave 2, then you have wave 3. Okay, then you have when you have this wave 3, then if you actually break this down, then you start to see the moving average moving lower. Then you will fail to go above that. Then you see the downtrend. So go to here. Then with some luck, you will go back, reverse it, repeat this again. Of course, market never listen to what you think. Market will do whatever it likes. So like here, it may actually go down here and not able to go higher, then just keep lower. So your curve actually start like this and go lower. And the other thing is you can be in here, then without failing here, you will touch this and go higher again, go higher again. Then this top will be rounding, extend some more to allow you have a little bit longer time. And sometimes even luckier with all the economy growth, instead of this rounding bottom, actually instead of going lower, the moving average starts to turn up. Then you still have another leg up. So once, I hope you understand this. If you don't, then just turn back the video and listen to what I just explained to you until you can have a little bit clear idea. So assuming you already have some idea, let's compare this, okay? Let's use this green line. This green line actually 20-day moving average. Try to compare to this. So you can see this region is similar to here. So this go above here, then stay above, okay? So when it pull back, first time pull back, did not touch the green, then struggle with the green, okay? Then it managed to go below, then try to struggle with the moving average for some time. So you can argue we may actually see something here. This probably equal to here. So that's why last week I was a little bit cautious. I wonder this may not even go to this level and we're going to go sideways. So this is what I was worrying. But it turns out that instead of keep going lower, you can see the whole thing. Try to imagine this is the whole thing, here to here, equal to here to here. So now we are resuming up. So with some luck, this is going to go higher. Then we're going to see some more higher. That's why I changed to cautious or neutral to bearish. Now I'm neutral to bullish. In fact, today I start to sell some put to take some long position. So this is one index. Let's look at other index, see if we can see some other information. So let's try to look at the ES. ES is the SP 500 future. So ES 500 future. If you actually quickly look at that, if you remember just now, the two big K bar is exactly the same day as the two big K bar appear in the NQ. But the difference is here. Let me show you this. If you have brief memory, this one actually has higher low than this. Okay, this is kind of similar. So this is not exactly, this 2 period of time is not exactly going lower. But if you look at the ES doesn't look as good. See, this K bar this is lower high, lower low. So for the ES, it's doing worse than the NQ. However, now the ES managed to conquer the top of this, but now it's still struggling with this one. So not all the index will do the same thing. So this tells you more money move back to buy the NQ, less money go back and buy the ES. Okay, so S&P is not recover as good as the one we just look at, that NQ. So next one is Dow Jones. Let's look at the Dow Jones. Dow Jones here, the first, when you first have that North Korea threat, it actually the K bar is smaller than the other two, but then here you have a bigger K bar. Now it drop here again. You touch the MA50, start to bounce, but you can see that compared to all these three, Dow is not even able. Dow is barely touched the top of this. So on this, about these three index actually should not major index. S&P 500, Dow do the worst. SP 500 do a little bit better. NQ do the best. So that tells you if you are a shorter term trader or even longer one, currently the best place to be at is in the NASDAQ 100. So that's why I feel a little bit optimistic and I'm focusing on taking a new position of the long position about this. But I'm still very careful. If I see this start to turn lower, I will be trimming my longs. Okay, I think I probably. Okay, just to give you a little bit from here to here, and all this time I'm accumulating cash. I'm selling my longs, so actually I have a lot more cash now. So I feel that I will be comfortable not to decrease my long until I see this region, about this level, get breakdown. If it doesn't break down this level, I probably will not decrease. Now that I think about this, maybe this T line, this light blue line, if we break the light blue line, I probably will start to take a little off the table. But when this break this level, I will much take my raise more cash more aggressively, because then this tells me we probably are getting closer to see this to go lower. Only time will tell. So this is what the message I have for you. Last week I was cautious. Now I am cautious, but I'm turning a little bit bullish. I think we probably will see some good market for a week, 2 weeks, maybe 3 weeks, unless there's some unexpected bad news come up. Okay, thank you for your attention. I will make this to be available on YouTube, and please feel free to ask me questions through Facebook or my Line group. Chat with me. Thank you very much. Bye.